Anyway, man, we've got a lot to talk about. So much has happened in like the 3.5 weeks since we've spoken. It's quite unreal.
I know, it's just like, it's everyone's saying, when's the newsletter out? When's the letter out? Every other day. Yeah.
uh, I think where we should start, because we topped out at whatever it was, like 58,000 something last night. We're seeing a dip now. For some people, they're gonna naturally panic. For me, I'm like, I expected this, but I've expected this 2 or 3 times since I last spoke to you. We just keep going up. So this kind of blow off is expected. Now, on the last one, the Willy Woo Voodoo, you set the price floor in that current cycle to 29,000, and I think it hit 29,156.
Yeah, that's right. And I'd say that, it's specific though. That's calculated, and it's calculated using daily close prices. So if the results is also like daily close. So, it could drop to 27 within the day and then bounce back up. And I think the daily close actually was close to the 30. So it didn't hit 30 and 30.4. So yeah, but it looked pretty spot on to that floor. Yeah, so and it double tested. And then we have the lovely Elon pump. And then I think Ruffer, the hedge fund that bought at 10,000, decided to take profit and sell off half their coins, which was 650 million. And I think that happened after the Elon pump. And so, I think a lot of us were quite surprised. We thought that would really stimulate buying, but it got slammed back down, and it almost looked like it was like a speculator pump went up and then went back down. But then, we had that kind of really kind of weird price action. If you're watching it, it just smoothly went up and up and up and up and up, and then Elon Musk did his little change of his profile to show Bitcoin. Oh no, that was the first pump. The second one was the SEC announcement, and it showed us that some of that buying, that really weird buying, was just up and up and up. Was actually Tesla buying their 1.5 billion. Was it 1.5? Yeah, 1.5 billion.
Well, there's a lot to break down there, and I'll definitely come back to the Tesla stuff. I think I'll start with where we're at now. Like, so we're seeing a bit of a dip now. I guess you were expecting this, right? You talk about in your newsletter, which, by the way, I am loving. Like, anyone listen to this, go and sign up. It's in the show notes. It's the best money you'll spend every month. You'll learn so much. I'm loving that newsletter. But you were talking about, previously when we're at like 47,000, that the floor support was like 34, and it was rising like 600 a day. So you've been expecting a while because you're saying we're ahead of the floor support. So whereabouts are we now? Like, what is the floor support now? What are you looking at?
It's rising. It's still rising. What was it like? Currently it's 38,600, which is very, and this thing just keeps rising over time. So it's very seldom do you get it to drop even a little bit. So I don't think, that prior high we had at 40 to 42,000 before we got the pullback. That's probably going to that's going to be a very, very strong support zone, particularly since the floor is it's going to be there by the time, if we ever ran down there, and I'm not saying we will, if we ever ran down there, the floor support, that model was never broken in the history of Bitcoin. So I say that you almost need a black swan to break that model. And so they'll coincide with this sort of technical support there. And so, yeah, we're quite high above. I mean, if you calculate that as where we were at the start of the day before this pullback, we went as high as, I think it was like 33%. 30 to 30, let me just pull it up right now. It was like, yeah, we got to 32, 33%, within the 33% price pullback range. And put that in perspective, when we topped out at 42,000 on the last top, that was in the 32% pullback zone. So, well, it's hot, though. in the last 6 weeks, I would say, 5 to 6 weeks, we saw this step jump in numbers of users coming on board the Bitcoin blockchain. And so that was a very strong signal that retail had arrived. And so, yeah, it wasn't a small graduation. It was like a overnight 3x in numbers per day coming in. And I'm sure if anyone's operating an exchange, they'll be seeing that also. So like it's a different dynamic now. Previously, we had a lot of these institutional buyers and high net worth, family office types buying in. And now we're, it's a sea of people coming in with a lot of small buys, and the prices, moved up quite high above the floor. And what that means is a lot of room to move. And, a lot of the work I do is really just reading the data that's coming off the blockchain. And when the retail come in, they're buying, but, they'll buy, and often a majority of those guys will buy and then leave their coins on Coinbase or whatever exchange that they're using, and not even pull them off into their personal sovereign wallet. So we see no data when that happens. So we're in this zone where, I used to have in the last 4 months when this entire run up, I had a very, very high resolution view of what's happening in the markets. All I know now is we're really floating quite high above that floor. And retail's here, and when retail's here, it can get really FOMO-ish, right? It can go really high, and it can pull back suddenly too, because that FOMO can turn into fear very quickly.
Remind me, Willy, how do you calculate that floor?
It's proprietary, actually.
Okay. Is it like
I kind of feel like if I released it, it's like a target for everybody to counter trade. And so often when you release signals, they cease to be true because it's not data symmetry. So I don't want to tell people how it's calculated.
No, is this like your equivalent of like grandma's secret recipe?
Yeah, a little bit. So yeah, I don't want to give it out, but it does work on the capital flows that are coming in through that we're seeing on the blockchain, and it's been quite accurate to date being the last 12 years of price action.
So let's talk about the Tesla thing, right? Obviously you saw something weird was going on, some weird buying, and there was something posted up on Reddit, and I'm not sure whether that was true or not, but somebody was talking about the company they work for. I'm not sure if they named Tesla or people assumed it was Tesla, but they were talking about the buying strategy. So my assumption is if you're going to buy 1.5 billion of Bitcoin, you're not going to fat thumb spot buy of 1.5 billion Bitcoin in one go, right? You've got to have a strategy for doing it. Like, I don't know the kind of like daily flows, but I'm assuming at that level you've got to be buying across multiple exchanges. You've got to have some kind of strategy so you don't alert the market, you don't overpay, but at the same time you keep picking up.
Yeah, I don't. You'd probably have to talk to someone who is like an OTC. Head of an OTC desk. I know that here in Asia, obviously you're trying to match buyers to sellers, but hey, anyone want to sell $1.5 billion of Bitcoin? Anybody in this bull market? It's not going to happen. So generally what happens is that mismatch gets sucked off the exchanges. And so, and of course, the exchanges are very, very efficient. So you tend to break that buy into tiny little bits, like you say, and then you spread it around all the exchanges through the entire world, actually. And anyone who's running a kind of a market neutral hedge fund where they're like trying to close those inefficiency and extract a little bit of revenue from it, and it's a very profitable endeavor. They have all the technology to buy lots and lots of little small parcels every second of the day, very high frequency, and that kind of infrastructure is what some of the OTC desks piggyback onto, because the hedge funds have built it. So even over here in Asia, like FTX here has an OTC like Portal, and I think Binance has as well. And there's really like I think that's very much the infrastructure that Alameda built when they were doing their funding arbitrage. So yeah, the technology has been built. So you'll just see the price move. You'll see it move up, and you won't see it's coming from one exchange or the other. What we do see is often what we see is USDC being bought and created, I guess, and that happens on Coinbase, and I think a lot of the US institutions are going through in that direction. But to be honest, I don't know exactly how that machine works over there in Coinbase, and you probably need to talk to someone else regarding that side of things.
Yeah, because it's like there's questions I have, like other things is like, well, once you are buying, you also don't want to be sending it all to a single wallet, because anyone looking can see what's going on there, and it becomes very obvious, and it becomes an opportunity to front run it. But at the same time, like you said, something was going on there, like it was going up very smoothly, and even I could see like every single dip seemed to be being bought up.
Yeah, and it was after this big shake off, right? And everyone was a little bit scared and a little bit gun shy, and yet the price just went up and up and up. So yeah, but you know what's interesting is that the Bitcoin price movement. I kind of wonder if there were more buyers than just Tesla. Like, what is it? I worked out, if you were to look at the numbers of it, Bitcoin's in that region where the market cap goes up $3.40 for every dollar you buy. So you would kind of expect what the market cap of Bitcoin to go up. About $5 billion, I suppose. And of course, it moved up much bigger. And I think that's because other people piggyback on top, and when they see it going up, they buy as well.
Well, somebody put out on Twitter the other day, and I'm not sure if it's true, but I think it's something like Coinbase has 5 people in the S&P 500 who've been buying. Yet the only one we know of is Tesla. So
is that others. Right? I haven't kept up with that news. But there's 5 in the S&P 500.
Well, that's what this tweet said, and I haven't been able to verify it, but that's what they said. But I suspect there are others as well.
Yeah, it's interesting, it's really interesting, because we have been seeing a lot of, like you're saying, how you got to be careful, and you if you pull the coins off the wallet, other people front run you. I think what generally happens is they've already bought at that point, and you want to really wait for your buy to complete before you pull it off. But yeah, it's in that zone. It was very, very bullish, and coins were being pulled off, and we've had that quite consistently. Like it definitely was. I thought we'd pull back after that news was out. Like there was a huge spike upwards, and we broke the all-time high above the 42,000. And I kind of thought that would, because that was just on news and speculators just front running the price upwards, but it just kept going up, and it was the same pattern. Every time it dipped, it went up. I was expecting more of a proper consolidation where the price would come back down and it would form more of a triangle pattern where each time it came down it would be bought up more and more, but instead it kind of went upward in a sort of channel where every time it tried to go down it got bought up. And so yeah, it was just really interesting past that point.
Yeah, I also wonder sometimes, like now, right? It's just dipped now. As we're having this conversation, it's just, I don't know if you just saw that. It just went down to 46,700.
Oh, let's have a look. See that?
Yeah.
That's pretty vicious.
Yeah, but it's bounced straight back up to 5,100. I also wonder if there's some people who maybe have a target of buying, 1.5 billion, but others are also saying, look, we'll buy X if it drops to this price. Like, we're only interested if it drops under 50,000, we'll buy some. Otherwise, let's just stay out. I'd love to know some of the buying strategies of these companies and how it works. It'd be really fascinating to understand, or if it's just, buy at any cost because we know it's going to go up, right? If they've got these expectations of these long terms, I don't know if it's buy at any cost or just buy at opportunity. But that I'd love to know that. It'd be an interesting thing to talk to Michael Saylor about, I think.
Yeah. I mean, like it's normally you say when institutions buy. I mean, I think he went on record saying that you wait for the market to come to you, but in this kind of bull market, the price was really, it starts to run away from you. And like now, but it wasn't a overheated zone. So I'd be really interested to know how they have that strategy. I imagine they just take the advice of the traders they employ, or the OTC desk that they're using. But I'm curious at how MicroStrategy bought their coins, whether or not they, they're a tech company, whether or not they actually built the infrastructure for themselves.
Yeah, it's probably something to get into with Saylor. I'll try and reach out to him and see if he wants to talk about it. So this 58k blow off, like the funny thing for me, I don't ever trade, Willy. I buy as and when. I buy sometimes on opportunity, or sometimes because I've got excess cash flow in the business. And they're the two times I buy. Like, to be honest, if we weren't doing this conversation, I'd probably buy a little bit now, and I might do afterwards, right? If it dips back below 50, I might buy some more. But I buy dips, but I never seem to sell tops, because one problem I have is, like, if I go and look at the chart now, I'm going to draw it up in front of me, right? Since we spoke, I think when we spoke last time, I've got it here, I've written it down. When you and I spoke is when you were saying the potential price floor of 29k. So if I look at the chart, let's get a 1 month chart. So going back to, I've got here this dip down to 29k, right? That's about the 22nd of January. If I thought I was going to sell tops, when it went up to like 44, 46, that felt like somewhere where I'd be like, okay, I should sell off, because it very quickly jumped on the 8th from about 37 up to 42. That'd feel like something to sell. But then it just carried on. I know it dipped back, but it just kept going up and up and up. And so I always think, like, that's where I like buying dips is fine, because you're in a bull market, you expect it to go up. Selling tops in a bull market seems very, very difficult.
It's pretty wise. I have a rule: I never sell during a bull market. I only buy dips on margin, and then I'll exit when it gets toppy. And I've actually run a simulation of it, and you kind of it was very, very minor returns you get from selling tops and then buying the dip. Of course, the simulation, you have to give it a strategy, and mine was just a simple moving average. And you sell a bit higher, you buy a bit lower, and it's a bit laggy. But instead, if you flip that strategy and you go, when it crosses bullish, I buy on margin, and then when it crosses bearish, I sell that. It was like a ridiculous return, right? It was just I think it was about 10 times higher than the other way around. And so I think a lot of people come into this market and they're used to buying spot position, and they buy the coin, and then they're used to selling the coin because they bought it on Coinbase or Kraken, and that's what they're used to, and they haven't been accustomed to how to essentially buy on margin, which is exactly how we buy our houses. Very few people buy the full price with cash to buy your house. You go to the bank and you buy the rest of the 70 or 60% of the house from a bank loan, and that's essentially what you do when you go to Kraken and you buy on margin. And it turns out that's a better strategy, and I think a lot of people it's not really recommended that you want to play that margin game. It's far better to do what essentially you're doing, Peter, to just buy, hold, and forget about it. But if everyone's tempted to trade, and if you're going to trade, I just found that it's very, very important not to try and sell the tops unless you're a pro day trader. You're better to buy dips, just like all the Bitcoiners say, buy the dip. And if you want, buy the dip with margin, and then when you feel like it's toppy, then you can sell that. At least you're selling the coins you bought that you wouldn't have bought anyway. So you've still got your spot position there. So buy the dip is the main thing you want to do, and the only time you really want to consider selling the top is the macro top.
The end of the cycle.
The end of the cycle. That's right.
I'm trying to develop a strategy for me, which I think works for everyone else. And whilst dollar value is great, what I don't want to do is end up with less Bitcoin during the cycle. And the way I can see I can end up with less Bitcoin is I sell what I think is a top and the price goes up, and then I have to buy some more, right? So therefore I end up with less Bitcoin. The other thing is where I can ever be in a position where I'm margin called. If I can ever be in a position where I'm margin called or stopped out, right, then I can lose Bitcoin. So I don't do any of those things. But like I say, I buy dips, I stack my sats, I keep going, and I'm waiting this big macro picture play out. But what I did do is the first time I ever bought Bitcoin, well, I didn't actually buy Bitcoin. First time I ever traded Bitcoin was back in 2017, was on plus 500 CFDs. And I reopened an account after our last conversation. I thought, I'm just going to put in a couple of £1,000 and have a play. And all I've done is every time there's been a dip, I've bought and I've watched it go up 15, 20%, and then I've sold. And in the space that, since we had our last conversation, I've got it here, I've got it open. That £2,000 I put in is now 3,086. So I've made 50%, right? But it's play money. It's only a couple of thousand. But I felt like what I could do is I could use this entire cycle just to learn and see if that strategy works for me. And then if it does, then maybe next time, Willy, I'll actually try. Maybe I'll put a couple of Bitcoin or one. Well, it depends what Bitcoin price is. Maybe I'll put half a Bitcoin or a Bitcoin buy it in the next one and actually start executing that strategy. But it works for me. I'm not losing any money. The one thing I would ask you though is, does the reverse work in a bear market? That you sell tops?
Yeah, it kind of does. It does. I think it's. I have to wrap my head around it. Like I had it in my head in the last bear market. I think it's just diminishing returns from memory as you like when the price is going up and go to infinity, right? Literally, if the US dollar goes away, but in the bear market, it can't go to below zero. It can only go to zero, so you can only capture the gain of the price. So Bitcoin's at like $10,000 and it goes to say 3,000. You're only going to capture that move downwards, whatever that is. Like that's $7,000 of movement. If it goes to zero, you're going to capture $10,000 of movement. So it's very diminishing return. So it's not as great to short in the bear market in that regard, especially in this kind of asset class, which is, it's essentially an adoption curve where we're going from nobody in the world having Bitcoin to majority of the world. And that by the way, is 2% of the world own it right now. So you can imagine the growth that is to come. We're, 1994, I think, in terms of internet adoption. That was when we had the 140 million people using Bitcoin, or in that case, the internet back then. It's higher than that. That was January, by the way. That was the January figure. So trying to short the internet, it's not a great strategy. You might get lucky timing it right over the next few weeks or months before and the bear markets don't last more than 12 months. So yeah, I mean, and remember the last bull market was 100x, and the bear market went down from 20,000 to 3,000. So there was barely a $16,500 move. You're not going to do the kind of ridiculous returns you get on a long market. So you get these people like Parabolic Trav who will just disappear from the whole scene and will only pop up when the bull market's there because he's on. He'll just go and take his holiday in the Bahamas or whatever he does.
3-year holiday.
You know, yeah, exactly. Because a lot of work shorting a bear market, and you're playing chicken with freight train, really. Yeah.
For smaller gains, that kind of makes sense. Yeah, that kind of makes sense. That's one hell of a wick we're seeing right now, dude.
Yeah, I'm constantly like,
should you be trading this?
I'm kind of in a neutral position right now. I just moved out of all trades, but that looks like it's going to move up, isn't it?
Well, it depends because there's a couple of things. Like, for example, I mean, Tesla are in a very good position, right? They bought a bunch of Bitcoin. It's turned out that they've made more money on Bitcoin in this couple of weeks than they've made in the last year selling cars. And we've got no idea if someone like Elon Musk is getting that kind of FOMO you get after you first make a bit of money with Bitcoin. He could be thinking, we should put some more in, or I should put some SpaceX money in. We don't know if Michael Saylor's raised his money and thinks, right, this is the opportunity to deploy that 900 million. We just don't know. We don't know. The other thing that's on my mind is that I feel like there's something different going on this year. These dips are getting eaten up really quickly. And I don't know what's going on. Perhaps you're seeing something, but I'm seeing a lot more people this time who are saying to me that I don't want to sell my Bitcoin ever. And we've got this maturing market for borrowing and lending, the likes of BlockFi, the Unchained Capitals, the Ledens, the Genesis. And I wonder if people these days are thinking, I don't want to sell my Bitcoins, so I'm buying them, I'm holding forever, and I'm just going to leverage against it. So I'm wondering if there's like these dips that are getting eaten back up. There's something going on there based on the fact there isn't that many sellers. Like, it's hard to wipe out that many sellers because there aren't many. I don't know. You might be seeing. Are you reading anything different?
I'm reading the same. There's a number of touch points regarding that. Like I did a study a while back. I just mentioned earlier. It was really a measure of this. That there's this term called reflexiveness. I think it's a George Soros term, which is essentially this feedback loop where in commodity markets, where as the asset price goes up, then there's less selling, and it's a feedback loop, and it tends to go more exponential. So I did a little calculation from the on-chain data we had, and you can kind of measure the capital that's been stored in Bitcoin, because you can kind of see when the purchaser bought and what they paid for it, and that was actually the capital they put in. So you can do a ratio of the capital that has been stored in Bitcoin and how that tracks upwards versus how the price moves upwards. And therefore you get this ratio of how much the actual price goes up to the amount of buying that was done with it. And it's been, it didn't really support the theory. We always thought in the bull market, less and less people would actually sell because it's going up. But actually what happened, from the data, you can see that actually people did sell into it. These old-time whales we can tell it was the old-time whales because you can see the age of those coins being sold. They bought it like pennies. And so they sold into the first bull runs, and then they sold into the 2013 run, they sold into the 2017 run, and across the span of that bull market, the dollar gain of Bitcoin was static compared to how much money was coming in. Yet this one's been unique because that is ramping up. As the price is going up, there's less capital needed to push it up even further because there's fewer people selling into it. So I'm seeing that on the data for sure.
So you're talking about essentially it's a redistribution from OGs.
Yeah.
Every cycle, there's some of them some of them probably don't want to sell. Some have got less left to sell. For a range of reasons.
I was saying, like, say you're 30 and you bought into Bitcoin 10 years ago, and now you've got like $500 million of Bitcoin. and you're 40. You probably got 20 good years to spend that money. So you're not really in the game of collecting more Bitcoins because it's going up exponentially. You're in the business of selling and trying to figure out what to do with that money because you've now got the problem of having too much money without, probably without a project to spend it on, like maybe Elon Musk would have a project to spend that kind of money on to get us to Mars. But so it's I think it's a different mindset, and certainly the OGs have constantly been selling, and that's been creating a very nice distribution, which is flies in the face of this FUD that the popular media like to throw out Bitcoin, where it's controlled by a very select few. It's what we're actually seeing from the data is that it's being distributed, and more so.
But it's that never sell narrative that's coming up. Like somebody said it's a few different things. Like Michael Saylor said it quite a bit about that. Why would you sell a pristine asset? You can leverage this. Like he can borrow money in the markets at 0%, right? I spoke with Jamie, the CEO of Hut Mining. She was talking about the fact that to cover certain capital expenditures or costs, they just borrow against their Bitcoin. They don't want to sell their Bitcoin. And I'm feeling similar, Willy. Like I had this long conversation with my son yesterday because he was like, "Oh, Dad, but you could buy that car you wanted or whatever." And I was like, "Yeah, I could, but this Bitcoin might go up to X price. But what I can do is I can leverage against it." I think it's slightly different. Like if you want to buy like a house, I think it's slightly different because the loan you might get against the Bitcoin is like really expensive, and especially if it's towards the end of a macro cycle. But at the same time, I did an interview with Dan. We talked about the super cycle, and I've talked to a few people. There does seem to be this change in mentality now that people aren't thinking, "Oh, I need to sell my Bitcoin." There's a lot of people now talking about what can I do to not sell my Bitcoin and just keep holding it forever?
It does make sense, right? Because it's so scarce, and if fiat is going to self-destruct, and I do think that we're coming into a new era of money. I don't think it's too crazy to think that the structure of our money is about to be invented. I mean, Ray Dalio will talk about this as a reset of the long-term debt cycle. Every time, every 100 years, we reset the money. So maybe we reinvent it with something like Bitcoin that backs it, or Bitcoin becomes it. I think a lot of maximalists think that. So if that's the case, you're never going to sell. It's valid. I think we're in a, I don't know when that will happen. I think in the shorter term, I honestly don't understand the structure of what's happening behind the scenes when you go and get maybe a BlockFi loan, and you over collateralize your Bitcoin. So you're essentially giving it to another player. They're figuring out how to make money on that by having more Bitcoins than the loan you've taken out. But essentially you're doing a margin position. You're buying, you're getting a loan on of fiat in this case on your Bitcoin. So you're probably going to be more sensitive to selling your Bitcoins now because a lot rides on it. If the Bitcoin price starts to drop, you're probably going to call in that loan, or you're going to sell your Bitcoins. You'll probably sell more Bitcoins because you've grabbed a loan to buy some stuff than if you were just holding without the debt. So I do think that as people are not selling their Bitcoins in the bull market run up, it's adding fuel to the upward trajectory of Bitcoin. But once that starts to turn, I could see that reversing really quick, and everybody selling their coins very quickly, and we'll get the same sort of amplified downward selling that we got on the run up. The question with the super cycle that Dan mentions is, when will that happen? Will it not happen end of this year where we normally expect it? Will it happen sometime further into the future? So I don't think anyone knows definitively whether that's going to happen. We probably need to see a lot. We need to see the data when we get closer. We'll see it when we get closer. I think the science will be there.
Well, it depends who's selling as well. I have a gut feeling that it's more likely to be retail who are looking for that opportunity to sell at the top. I can't see Tesla looking to unload $1.5 billion of Bitcoin towards the top, because I think they potentially end up, like, if it does happen, and then Square does, and all those companies look to unload those $1 billion positions, that could be quite catastrophic for the price.
Yeah, I think no doubt it would be. if let's say 25% of the S&P 500 decides to unload their positions, that would be catastrophic. I think that when we talk about institutions, it's quite an interesting term. It's like, let's create a word, let's call it institutions, and if we translate that, it means menagerie, right? It means here's this kind of species, which is a Tesla. And then, you roughly, there's this other species, which is a MicroStrategy. And that, in itself, they're two different animals. MicroStrategy is essentially an ETF without being an ETF. They issue convertible notes, and then that's how they buy more Bitcoin. You can convert that debt instrument into the equity, which is essentially the Bitcoins. And it tracks like an ETF. So I think that's a different animal from Tesla, who just actually want to use that to shelter from the inflation that's happening on their cash position. And then you've got like Grayscale. Then you've got like Ruffer, who just sold $650 million worth of their Bitcoin back at the 40,000-ish range.
Well, the Ruffer one's interesting because I was chatting to Nick Carter about this. I think it was Nick Carter. But essentially, their Bitcoin position is now a free position, right? Because essentially they sold off their original investment cost. So all the Bitcoin they're holding now, they essentially hold for free. And they received some criticism. But there is also that situation where some companies are saying, look, we're going to have a 2.5% allocation, but if the price doubles, maybe their allocation becomes 5%, so they have to sell off. And I think if we see an increase in these companies who are just set in an allocation, whether it's 2%, 5%, whatever, that's going to hopefully give some stability to the price, because therefore if the price drops, they'll increase their position.
Would they increase their position? I don't know. Like their directive was like, too much of our fund is within this was to go up to 5% or 10%. They will have a particular risk management strategy. That strategy is, like in that particular hedge fund, they don't know it. Probably they don't know that they invested in the closest thing to a publicly traded startup, and so what their directive is to sell their winner to buy more of their losers. Right? Well, you never do that in tech, and so I don't know if like the free Bitcoins they've got now becomes like 70% of their portfolio, which I think a lot of Bitcoiners who've been in the game long enough, they put in like 1% of their assets, and now it's like 90%. They understand this happens. I don't know if like that kind of fund would just decide to not sell anymore or buy more, because why would you buy more? It's already 90% of your portfolio. It doesn't even make sense. So I don't know if that would be the case. It would have to be down to the director of each fund. I mean, Nick Carter, I think, has a fair idea of how funds operate. And again, each fund is different. You can have like funds that buy and hold for long term, like placeholder, and you can have more trading funds, just they might be playing all sorts of strategies. So when we say institutions, they're a complete menagerie, and they're almost like people. Everyone's got their own strategy, and I don't think we can make a call on that this will happen because institutions are here. I can totally see institutions selling tens of billions of dollars of Bitcoin at the top. serious amounts because they're more actively traded, or they've got very strong risk management protocols. I don't know if we were pretty sure that MicroStrategy won't be selling because I just I just rewatched Michael Saylor essentially reiterating that in very, very strong terms and not mincing words to Laura Shin in her show. So
what did he say? I've not listened to that.
It was like a 10-minute it was a 10-minute case that this is the monetary network. Why the heck would I want to sell? Would I want to sell electricity to, would I sell the electricity technology to buy back what we had before? Essentially, this is the future. I'm not selling that over a silly little short-term trade. If you're a trader, you might want to sell the top and buy the dip, but he's in it because this is the future. And so very strong arguments over a long arc of time of where we are going without a shadow of a doubt, which I agree with. It's just whether or not that, the bear markets to date have been pretty rough. And I'm thinking Michael Saylor is resolute in that position. I don't know if his shareholders would be, and he'll have to weather that. And I think anyone who's been in more than one cycle will understand what it feels like to weather a bear market in Bitcoin. So I'm interested to see how that works out. Yeah.
Do you know what though, Willie? The bear markets are rough. I've kind of been through two now. One actively, which was the last one. The other one more passively. But they're rough, but in some ways they're less stressful.
Oh, it's so great. You can take a break.
Yeah. Like the scammers go away. My emails have a bit of more of a break. You can focus on building things. Like it's a bit more stressful now. There's a lot more pressure on your time, but I don't know. There's something enjoyable about a bear market. I guess if you
totally agree.
If you sold near the top, especially as well. I remember a friend of mine in the last bull market. He came to me when Bitcoin was like about 2,000. He was thinking of getting in, and he bought up a few Bitcoin. And he contacted me when he sold at 19,000. I was like, mate, you've killed it.
Oh my, that's just yeah. Was that luck or was that just he was a pro?
No, I think it was a bit of luck. It went up. He thought it was a good time to sell. Like it hit kind of like 20, dropped, and bounced straight back up. On the bounce back up, he sold it.
Oh, that's perfect. That was absolutely perfect.
Whereas I held that shit all the way down.
Yeah, so I think even if you sell, like maybe you sell half, something like that, or you at least know if it goes up, you should be happy. If it goes down, you should be happy, unless you're the other type that's going to be sad either way.
How's your what are your views now on the kind of like the wider macro cycle? Because I had a conversation with somebody yesterday, and they've talked about there was a tweet that went up from Cobain, who seems to always be very accurate with his. Talked about 800k by November, talks about 200k Q2, and then a very painful Q3. You've talked about a 400k potential top. Like, what have you got a change in view on the wider macro thing? What are you looking at? What are you seeing? Because we're at the stage where we've got corporate FOMO, and these people have got deep pockets, and that's against the backdrop of wider economic problems. And we've also got the kind of like the first sniffs of nation state adoption. The kind of messages that the rumor of Kenya adopting. The senator in Nigeria saying that Bitcoin makes their currency look effectively worthless. My assumption is like someone somewhere within a central bank or government has got to be looking and go, we might want to think about this. If we start to see a wider corporate FOMO and a wider, potentially even nation state, we could really see something like we've never seen before, right?
I thought about it from a while back that, we're used to these 4-year cycles. And, we're locked into the gravity impulses, not the gravity, but essentially the impulses of the block halvening every 4 years. But at a certain point, that kind of supply shock, which gives it a shove, becomes weaker and weaker and weaker. And I think we were talking about it on your show the first time, where actually the sell-off from exchanges to pay their salaries and profits and move it into cash is actually more significant than the sell pressure of the miners now, right? So the halvening cycles become less important, and what's happening in the macro space, the traditional markets, who's buying, who's selling, becomes more important. I kind of thought that might happen in another 4 years, but I did not initially think that, suddenly would have all of corporate America starting to look at buying this stuff. And certainly that's kind of an order of magnitude of buying power that we've seen before. Like, we've seen that once before. I saw that in that first really crazy bull market in 2012 to 13, and we had Mt. Gox that was live, and people around the world could buy the coins, and instead of having to figure out who was mining it and trying to contact them. And so there was a big mismatch in buying power compared to what was traditionally there. And we're seeing that now with these huge amounts of trillions of dollar sort of corporate treasuries looking at buying in. So Dan supercycle, Dan Howard supercycle, for sure, that's got a very definite logic there. And so, but one thing I do is I don't try to say that we're going to do this and then going to do this and we're going to do this, because what I want to wait for is to have significant concrete information that's coming off the blockchain or coming off exchanges, or I just want data to be able to see whether or not that's actually possible. And I want to look at the models, and the models currently point to 200 to 300, but they're constantly moving and changing. And so I'm looking 10 months into the future with that model, but like really the majority of the models that I have and from the data, it's only within 3 months ahead. And so I can't make a call of where we're going to go up, down, all this. Like that's probably more behavioral economics of looking at the participants, and you can make guesses for sure.
But I guess you get surprises, right? Like Michael Saylor was, before we had Michael Saylor, we had a price that was trying to get above 10K and stay above K, and then we have Michael Saylor comes in like a whirlwind and changes everything. And then prior to our, before we spoke last time, we didn't have Tesla. Tesla's a game changer. I guess if in the next couple of months, India comes out and says they're putting $5 billion of Bitcoin on their balance sheet alongside their gold stocks, again, that's another game changer. So I guess things can change quite significantly, and you have to react to that. But at the same time, you're still going to be using the on-chain data. You're still going to be looking for indications of what's going on.
Yeah, exactly. It's a pity I can't see which countries they're coming from, because wouldn't it be funny if it was India buying, because they banned it? Yeah. You got 1.5 billion people going, buy Bitcoin, buy Bitcoin.
Well, I was told there's more buying coming in from South America. I don't know if you've seen that.
No, I guess local Bitcoins is the place to look at. I don't monitor their data. Yeah. Do you see that Bitcoin's just pumping right now?
Yeah, I know. Like, it's basically
buy.
So we started this conversation, and Bitcoin was at like 54, and then during the conversation it went down to 46.7, and now it's basically back up to 54.
Yeah, it's just insane. Okay.
Yeah. Do you know what? It's been that year that I wouldn't be surprised if we get another all-time high today. Like later today, we're like at 59. Because of the way this weird year.
Yeah, I think if it gets past that, I'm looking at the resistance line. If it gets past that, yeah, it's gonna go. Well, it's going already. But it's a funny thing, this Bitcoin price. It keeps everyone glued to these swings.
These dips I don't remember in 2017 these dips getting eaten up like this. I just don't remember it. Maybe it did. I just don't remember it. But there must have been.
They were more volatile actually. Like we're like kind of mind blown by the thousands of dollars of movement, but
should be looking at the percentages. Really,
you look at the log chart of it. It's like, gosh, why is it so smooth? Yeah, it's like we pulled back. What was it? That was that tiny little wick, and everyone was freaking. It went from 58, just below 58 to 54. Dropped down $4,000, which is like it's a tiny little
dip France.
It's like yeah, 6%, something like that. That was the bottom of the wick, you know.
That's a lot of volume pushing it back up now, though. Again, look, 54. Listen, I got a couple more questions before we finish off. So another thing that stood out to me was I felt like we got through 50k pretty easily. I expected it to be some kind of psychological barrier. And we bounced against it once, then Saylor announces that he's doing another convertible note. And so that gave us a push. Are you expecting any kind of like how important are these psychological numbers, these kind of milestones? Because I look at something like 100,000, I think anyone who sat there with 10 Bitcoin is thinking, I'm a millionaire. Like, do you get these psychological barriers?
Yeah.
Or is it just not relevant?
I think they're relevant. We had the $1,000 barrier. And then we had 100 million was a big one. Wasn't that around 6 million? And we just stuck on there for a long time. I was surprised that we sliced through the $1 trillion mark very quickly, but it looks like we came back to retest that. So yeah, I think it makes a difference. I think it does. I think maybe we had this kind of news cycle and just the FOMO, just on overdrive the last few weeks that we were able to slice through it. I think if we were a much more tentative market, these barriers would be a little bit, the psychology would of these round numbers would probably have been a little bit stronger. Yeah, I put weight on it.
Yeah, it's a strange one on these psychological barriers, because the 1 trillion, I was similar. I mean, I know it's a moving target, but it seemed like I don't know, was it like a half an hour? It seemed to kind of like bump up against like a flat price, and it didn't move, and then suddenly we were through and we were gone.
Yeah, you know what though? Like, we won't think of the $1 trillion mark as a resistance, but I don't know about you, but I was listening to some of the stuff, like the conference that Michael Saylor put for corporates, and what was interesting was that we were like wanting to buy cheap, right? Oh, it's too expensive for us now. It's like, what, $50,000 or $40,000, whereas institutions are waiting for it to be de-risked, so they want to buy it expensive. And so $1 trillion, now we can buy it.
Yeah, that's
so
what
resistance.
Travis Kling told me. A couple of years ago, Travis Kling was saying to me, a year ago, he was saying, listen, there's some people who can't buy until it's over $1 trillion market cap because it's seen as too small, seen as too risky. And I was like, what? He's like, yeah, they just can't buy it.
They'll get fired for buying it for less than $1 trillion, right? So
yeah,
no one wants to get fired. So
it's a really unusual thing, like for someone like myself who's not a trader. Yeah, really unusual. All right, listen, before we finish off, anything else you're looking at? Anything else you're thinking about? Anything on your mind?
Yeah, I was trying to figure out this big sell-off, and the very peak of it started when there was a little alert that we had $1.5 billion that just moved into the exchanges to sell. The assumption was to sell, and I think that spread amongst traders, and we started to see the sell-off preempting that. And what I was just talking to the CTO of Raphael, the CTO of Glassnode, and just saying, is this legit? And it looks like that was actually a labeling error on the wallets, and that it was just an internal movement of coins within Gemini. That killed our momentum. That might have been what killed our momentum. We had plenty of room to move downwards because we were floating so high above the fundamental floor. But yeah, that might have been what caused this crazy sell-off, and it was just fear incited by bad data, which is pretty interesting to me.
I've had the chart open this whole session we've been doing, and it's been fascinating to watch.
Yeah, it's like crazy little wick down now. It's not even little. It's It's we're hypnotized by the chart right now.
Yeah, well, we're above the wick down from that 50, that one below, just below 58. I tell you what, I reckon I'm gonna crack up if we do an all-time high today. Imagine we finish the day above 60k. That's gonna be hilarious.
Like I tell you, that kind of wick, when it goes that deep and it's rejected, that's ridiculously bullish for the next few hours and days ahead.
When it's rejected though, what does that mean? What like what's going on down there? Like how is that being rejected?
It's what it's saying is I'm selling. There's everyone scared, and then buyers are coming in and saying, I'll buy that. And so you can't force the price down because there's very, very strong buying going. That is a bargain. So we never got price discovery for very long down in that range. Price discovery happens when, moves sideways a bit and they're kind of agreeing. But when it goes way down asymmetrically downwards and it gets bought up, we know, okay, it's cheap down there. It doesn't belong down there. It belongs up here. So that's what's just happened right now.
Interesting. Well, listen, Willy, love chatting to you. Learned so much from you. Anyone listening, just definitely go and check Willy's email out. Sign up. It's well worth the money. I subscribed. He did offer it to me for free, but I subscribed. It's well worth the money. Listen, dude, appreciate it. Tell people where to go and sign up, where to follow you.
Yeah, just go to my Twitter profile, Woonomic on Twitter, and the links are from there. I write on Substack. It's willywoo.substack.com. But yeah, just go to the Twitter profile and there's the link there.
All right, nice one, dude. Well, listen, look, take care, Willy, and I guess I'll see you in a month and we'll see what weird shit happens in the next month.
Thanks, Peter. It's been fun talking.